Dow, S&P, Nasdaq, three names you hear every day, but do you actually know what they mean? Each index moves differently, weighs stocks differently, and tells a different story about the market. Miss those details, and you're misreading the entire economy. We break it down, no jargon, just clarity. Watch the full video, because if you're investing without understanding the indices, you're flying blind.
Moving forward, we're going to wrap up this week's 5 things with our educational topic. Again, this is the nuclear AI issue. Today, Gary, we're going to be talking about understanding the major market indices, going through and breaking down each one of those. But before we get into the individual ones, Gary, why don't you start by giving us high-level understanding and definition of what is a stock market index?
All right. So have any of you ever heard the expression, the market was up today, or the market was down 1%, or the market was up 400 points or 1,000 points, or it was down 152 points? What does that mean? What is this market? What does it mean that it was up a certain percentage or down? Is that all stocks? Is that some stocks? How are they calculating that? What does it mean? And we're hoping that by explaining this to you, you will understand the language of finance better and understand that when people talk about the market being up or down, what exactly that means, right? What are people referring to?
Yeah, now, Gary, there's obviously, as we know, multiple indexes. We're going to talk through some of the most popular ones here. They both have kind of different quirks you use as a term, which I thought was a great one, a makeup of the individual index. So let's start, Gary. Tell us about the Dow Jones Industrial Average. You'll hear it commonly referred to as the Dow, DJI acronym. Tell us about the Dow.
So the Dow Jones Industrial Average is the oldest market index out there. It's certainly the most famous, and it's a price-weighted index of 30 large U.S. companies. And they're typically, large cap companies that are industry leaders, solid reputations, big growth prospects. It's sort of like the old money country club. If you get the invitation to join, you're a really big deal. You've made it. The big issue, there are two big issues with the Dow. One is it's only 30 companies, right? 30 large companies. But the biggest quirk of the Dow is that the index is price weighted, which is a completely insane way to put together an index. And price weighted means that each stock's influence on the index is determined by its price per share. So a high price stock in the index will move the index more than a lower price stock, but that's irrelevant when it comes to market cap. So to give you an example of how silly all of this is, let's imagine that you have a company that's in the Dow Jones Industrial Average, and you have a certain weighting in the index. If you were to do a 2-for-1 stock split, and typically when a company does a 2-for-1 stock split, the price per share will be cut by 50%. When that happens, that company's influence in the index gets cut in half, right? Nothing about the company's changed. Its earnings haven't changed. Its revenue hasn't changed. Its growth rate hasn't changed. Its multiple hasn't. Its market cap is the same, but its influence in the index is cut in half. Now, that's a legacy from a time when people didn't have computers, right? And this index is literally hundreds of years old. And so you really wanted to be able to just sort of do it quickly on the back of a napkin and didn't want to be in a situation where, you were trying to figure out the weighting of individual companies and doing market cap calculations. Nobody even had calculators at the time. It would have taken a long time. So I understand the reason it was done the way it was done. It made the calculation very, very simple, but it's just a weird, quirky way to calculate a market index. It's still popular largely just because of historical weight. It's just been around for so long that it's what people think of. That's all.
Makes sense. Gary, moving forward, let's talk S&P 500 now. Obviously, another index that people, I'd say with the Dow, the S&P 500, probably closely behind in terms of indexes that people are watching.
Yeah, so the S&P 500 is a market cap weighted index made up of 500 large US companies. It is typically considered to be a proxy for industrial America, right? The 500 of the largest companies in the United States. Generally, the health of the S&P 500 will give you a pretty good sense of the health of the US economy. Just a reminder, when I say that, I'm talking about things like revenue growth and earnings growth, not necessarily the stock price or the value of the index, which, you could have the multiple go up, which is a big part of where we are right now and why I'm a little bit concerned about market levels. Now, when I say it's a market cap weighted, what that means is that a company with, say, a $3 trillion market cap, there we're talking about companies like Apple or Microsoft or NVIDIA, will have 3 times the weight in the index that a company with a $1 billion market cap will have. Okay, so that seems reasonable. That makes sense. But here's the quirk that leads to. If we take a look at the Magnificent Seven stocks, right, these 7 large tech companies, the mega caps, those 7 stocks make up roughly 33% of the index, while the other 493 companies account for 67%. So 1/3 of the index is 7 stocks, 2/3 of the index is 493 stocks. So that will make the index very, very weighted to a small number of companies, largely in one industry, in technology. They're very heavily weighted in that direction.
And then, Gary, finally, let's talk about the Nasdaq Composite. That will be the final index for today that we'll talk about. Tell us more about the Nasdaq.
All right, so the Nasdaq Composite Index, that's also a market cap weighted index like the S&P 500, but it is the market cap weighted index of all common stocks listed on the Nasdaq exchange. So unlike the Dow and unlike the S&P 500, which are only large companies, the Nasdaq includes both small and large cap stocks. So far so good, right? I mean, that's great. So we've got market cap weighting that makes more sense than price weighting. And we have a large number of companies with a wide range of market capitalization. So we should be good. What's the quirk here? The quirk here is that the Nasdaq is heavily weighted toward technology companies. That makes up roughly 59% of the index. So where the Nasdaq is a much broader index, the fact that almost 60% of the index is in one industry skews things in that direction. So basically, to summarize all of this, right, we've given you a clear understanding of what these indexes are. When someone says the market was up, the market was down, this is what that means. But it's really important to remember that every one of these indexes has some sort of weird quirk that makes the calculations a little bit strange, a little bit inaccurate, a little bit skewed. And that's okay. Like, it's okay to have some sort of inaccuracies or quirks in the calculation. The thing that's important is that you understand what they are, that you understand what they mean, so that you can take the right meaning away from it.
Yeah, I think you nailed it right there, Gary. They all serve as benchmarks, but understanding the nuance, what makes up the weighting, I think is important when determining, okay, what exactly this means from a financial news perspective. That wraps up this week's version of the 5 Things, the nuclear AI issue. Thank you so much for listening and watching. Again, be sure to head to deepknowledgeinvesting.com, grab a free subscription. We'd love if you consider a premium subscription as well. You can always subscribe to our YouTube channel. Thumbs up, thumbs down. If it's thumbs down, though, let us know what we did wrong. We'd love to hear it. That's what gets us really excited about doing this show.